Okay, well, let's do a quick review of the markets before the jobs report on Monday morning. It was a slight down day today. I mean, the ES was down 0.22% and the RTY was down 0.06%. Not exactly dynamic, but everybody's kind of in a waiting mode right now. I'm looking at the ES right here. And as I mentioned in the post this morning, it's kind of a pattern within a pattern. The key we're at right now is this Fibonacci at 4309, and we have stayed beneath that ever since we got this nice hard tumble on the morning of the 3rd. And so you can see the topping pattern here. We plunged and we've been beneath it ever since. And then if we back up from a 15-minute bar to a 4-hour bar, you can see this beautiful topping pattern here. Zooming in on this, it was forming for the longest time, broke here on the 21st. And so since September began, lower lows and lower highs, all the way down, lower lows and lower highs. And hopefully what we've seen recently is just another lower high. It is rather important that we stay under the certainly the price gap, I would say 43.25, and the oh my God, do not go past this area is 4,400. That's absolutely essential. But we're neatly, tidily positioned right now for what could be a traverse down to 41.55. And as we look at the NQ, kind of a similar situation. Nice right triangle setup. Not absolutely perfectly clean. A little bit of violations here and there, but on the whole, not bad. 15.060, the base of the triangle. And of course, what I would love to see would be at least a tag of this fib, if not a breaking of that fib. And at this point, I would lean toward the semiconductors as the guide. You know, what's going to happen to SMH? If the NQ can weaken and the SMH can ultimately break this level, 139.76, I think we're going to be off to the races in a big way. So I'll say it again. If we can break 139.76 on the SMH, particularly in tech stocks, will be quite the swoon lower, because this is a beautiful topping pattern, but it has not completed yet. We have been recently just banging around within the confines of this zone right here, just kind of dicking around, monkeying around, you name it. But that's essential. It is amusing to think that it was only a few weeks ago we were at a 12 handle on the VIX. We managed to get, goodness gracious, over 20, which these days is like worthy of celebration. Back in the day, 80 was a real nasty market, but now 20 is like a huge deal. But I'll take it, 12 to 20, not terrible. Gold stinks. Since May, it has lost, almost $200. Silver is also just wretched. I haven't touched those in a while. It's just kind of extraordinary to see this. And this is all during the US dollar. And it must be so galling to the gold kooks out there that the dollar, that piece of paper, gets more and more and more valuable, whereas gold gets less and less valuable. But there's the USD over the JPY, just roaring higher, because I guess, the Japanese yen must be 1-ply toilet paper, and we have 3-ply toilet paper. So the US dollar is just doing fantastically well. And the bonds have been steadily falling since early April. This was a nice clean top right here, this zone. And since then, this is great head and shoulders, plunge, push back to the neckline, and then just a series of fall and fall and fall and fall and wow, like this, which has yielded a market in which the, for example, the 15-year fixed rate on a mortgage has gone from 2% to about 7%, which is why nobody wants mortgages anymore. So, and let's just close up with the RTY. This one's going to have a harder time falling because, man, it's been bashed to pieces. This was the head and shoulders pattern here. And let me just eyeball this. So 1842 on the neckline and close to 2042. So it's something close to 200 points Take away from 1840, but it's at 1650. No, we might still get a little ways to go. The measured move on this would be around 1650, which is going to take some doing. But you know what? Actually, I'll shut my mouth. That actually works out real cleanly. What I was just muttering there was just a quick, in my head, targeted move. And that would actually work out beautifully. Look at the fib down there at 1647. So yeah, maybe that's it. So I'll just, you know, my little light bulb above the head says, if we do fall hard, there's a key target down there. Absolutely important. And that'd probably be the low for the year, I would suspect. So anyway, just to wrap up, I'm about, I've lost track. I think I'm at about 20% cash, and I'm out of my XLU and LQD longs, pure shorts, and I've got 13 of them. So fingers crossed. It's been a great few weeks. I hope Friday's a good day. I'll see you then.